and maybe we won't call them an agent, and in fact, actually, the traditional agents need to kind of reinvent themselves a little bit, right? Almost as you said earlier on in the conversation, sort of community ambassadors, if you like, right? That actually helps them in the new society, in the new location that they're in, right? And that in the specific use case of remittance, that they are actually the ones kind of, helping companies like ourselves promote and sell in the digital way of doing things, which is much lower cost than the traditional models, right? So I think there is a reinvention of that particular role, as opposed to just single-minded, single-focused remittance agent, right? That to me, I think, will go over very quickly.
I think it started happening. If you really look at the Saudi remittance scenario today, for example, there is a bank called National Commercial Bank. When they started in 2009, they started offering remittances. Right from day one, they started sourcing through the ATM CDM. First 2009. For the last 9 years, they've been sourcing the remittance business through the ATM CDM. The registered customers can walk to a cash deposit machine and do a remittance all on their own, right? Looking at the success that they had, many banks in Saudi are today looking at that model. Now, the remittance business in Saudi is completely dominated by the bank. Each bank has a remittance arm, and the remittance arm carries out the remittances, right? Now, looking at the NCD success today, most of the banks in Saudi are looking at a model where the customers who are registered can walk up to a machine and do a remittance. Even in US, for example, there are partners today, there are retail guys who are switching to a non-brick and mortar. For example, they will have a machine sitting in the corner of the shop. It's a kiosk which can offer an end-to-end remittance solution. They will not play any role at all. Their frontline will not touch cash. They will not do anything with regard to remittance. The customer who is registered can walk up to the machine and do the remittance. There is another model which is fast evolving, which we call as fix and pay. You do a transaction on your mobile app, then you walk into a store to make a payout. At least the first half of the transaction cycle is carried out on a mobile app, right? And for the second, for a customer who is averse to paying online, he or she can then walk into a store and make a payment.
Now, I'm going to add something that is interesting. The money transfer industry has relied on agents for years, since it started. And now banks are going into the agent model. I mean, there's a lot of countries and regulators who have approved correspondent banking. And now you have banks having agents for a number of their operations. So does it mean that banks are going the other way, and they're just food of thought? Questions? I'll have more questions, but I would like to hear some of you. We have 10 minutes, so if you does question and statement, if you want to throw, yes, please. And introduce yourself. Yeah, you just turn it on, I think. It doesn't work? It has to change seats. You can come and use my mic too.
I'm Supriya Singh from RMIT University. I'm an anthropologist of money and feel that I need to speak for the consumer on the ground. There's a huge gender gap despite fintech. And in many countries, women are absent from the fintech thing. And I want to take up Hugo's point, that sometimes it's the technologies that are enabling the cash transfer. Mobile wallets are doing it now just like ATMs did it before. I want your opinion on perhaps a real culture clash here. At the ground level, people want to use a number of different forms of money and channels for different kinds of payments. And if we're sitting over here, you still might want to put Malaysian ringgit cash in your son's ang pao packet. All right? You may not want to put a digital token in his ang pao packet. Is there a cultural clash between the model of a cashless, efficient economy that people who are promoting financial inclusion have, that's totally contrary to payment and transfer practices on the ground?
Love your question. Thank you very much. Who wants to try to say something?
So maybe I'll
There's
start.
no tomatoes or anything. They're not going to throw anything at you, so you can say.
Actually, I wish there were. So let me start. I think the whole basis of what Axiata is trying to do in a financial services sector is to serve the underserved. All right. So in every single one of our markets, be it in payment, in insurance, in remittance, in savings and investments, in all these segments, we feel that the unit economics based on the current banking model does not provide an avenue to serve the underserved. And it is effectively our mission to go solve that problem, right? As an example right now, when we launched Boost, we announced that MDRs will be zero, right? And that's because we wanted to bring digital adoption to the merchant ecosystem that is out there today. So, if they want to adopt an electronic payment, solution with some of the EDM suppliers and whatnot, there is an MDR there. We have set MDRs at zero. So effectively, they can adopt our solution for zero fees, zero charges, right? And therefore, whatever they do, harden that. But where do we then, where do we, if you like, kind of go further from here, right? That's step one. Step two then is in lending, because once we have the merchants using our solution, and in fact, we've actually built the engines, so there can be scoring engines that then can say, hey, look, we've looked at your pattern of transactions. If you are interested in a working capital loan, we can provide you that solution, right? And in fact, actually, we are starting to look at that. So anybody here that visits kind of the street markets and the hawker centers in Malaysia regularly, you'll know that actually one of the important purchase item for them, those diesel generators, right, that powers on the lights and everything else, they cost a little bit of money, right? And for some of these new merchants, can't afford that. So right now, based on their transaction patterns, right, these are street merchants, right, street hawkers, we're starting to see enough of a pattern that says, hey, look, you know what, we can actually, score you for some kind of credit product, and if you want to, we'll actually provide you with a working capital loan, right? And so that's effectively sort of the next step. We talked a little bit about microinsurance, right? The foreign worker segment is an underserved segment, and we have, sort of solutions. We have an investee company based out of Sweden called Bima. It is actually the largest microinsurance company in the world, and it, focuses on Nepal, on Bangladesh, Sri Lanka, Cambodia as some of its core markets, really kind of bringing the segment that's currently underserved right now into the insurance domain. So market by market, we're trying to attack this, but I think, again, just to repeat, right, it is our mission that we want to sort of digitally include those. We have, made a commitment to our board that even if we do dish out these kind of lending, the lending products will not be, the interest rates that we will charge will not be in the same light as, if you like, some of the payday lenders that are out there that's charging effectively 200% APRs, right? Which is ridiculous for some of these some of these underserved segments. Hope that answers your question.
Okay. One more question or comment? Yes, sir. Yes, there.
Okay, good afternoon. I'm from
Introduce yourself, please, sir.
Fernando Silvosa from Central Bank of the Philippines, and we've been part of our interests is into remittances, and we've been coordinating closely with MTDs. Now, I'd just like to look into, get your views with respect to your way forward plans as to whether MTBs would go into partnering with retailers, goods retailers. Just to give you an example, we welcome essentially all the developments taking place within the MTBs, right? Technologies are coming in, but the thing here is that beneficiaries are kind of hesitant in, or remitters, Filipino remitters, overseas Filipino workers are a bit, have some reservation with respect to fintech and all this new developments or technologies embracing MTBs. Why? Because from the neighborhood, from where they belong, they couldn't convert this e-money or money or cyber money or digital money, which is stored in their e-wallet, because much of the retailers are not really into it. I mean, they don't have the facility to convert that into cash. Second, many of the retailers do not have the facility actually to effect any sort of transaction. Beneficiaries have to travel so many kilometers just to convert them into cash and then go back to their village to, effect such whatever transaction they would want for goods, for their day-to-day expenses. My understanding is there's one way back 7 years ago. There's an independent NTB who went beyond remittance. What they did was they sort of came up with a retail store, grocery, in a village, in the village that doesn't have internet, whose cell phones are analog signal and not smart. And so they're kind of having a hard time actually embracing this new technology. Mondex, or this new company, came up with a store where they're able to convert and effect any transaction buying goods in the grocery using this one. But beyond that one, I mean, it's kind of limited. I mean, for other regions or other rural areas, it's still not so much of a...
Well, I just want to add that you just describe how complex it is, because the ecosystem, to create the ecosystem is quite challenging. And if we go back to M-Pesa that we mentioned, I mean, they were clever enough to create the two things at the same time, the agent and the personal use, and grow it together. It's quite a complicated issue to create that ecosystem. I normally tell the money transfer companies, look, create an app and just inform the recipient that he got the remittance, and then he can do the same thing that he's always done, just go to the place and pick it up. Sooner or later you will develop the ecosystem. I think that we just try to do things too fast. You being an anthropologist of money, you know that. And it's understandable. Younger people like to do things faster. They think, and as we grow older, we know that just time takes its time. So we do agree that sometimes those solutions, we need to be patient, because we're talking about humans and we're talking about people. And yes, cultures react differently. The reason why Germans are not so keen about cash is because they don't want the government to know what they're doing with their money. So there's political aspects too. Governments are becoming increasingly control freak. And how we are going to react to that, we don't know. It may be, we would say, I'm not going to start paying anymore. I'm going to start using my cash. I'm going to get my cash, so nobody knows what I'm using my money for, So there's other aspects, cultural aspects, that create differentiations in certain markets, So time is up. She's been showing me the time's up, so thank you very much. Thank you, my panelists. And thank you for being here.